Welcome back to Alpha Recap, your aftermarket rundown from stockalpha.ai. Markets closed lower today, and we're breaking down why. As always, if you have questions, you can reach us at stockalpha.ai.
Hey, great to be here. Big day for narratives, a mix of company filings, AI commentary, and a regulatory headline in cannabis really shaped trading.
Totally. Quick snapshot first. Headline indexes finished modestly down. The S&P finished the day down about 0.4%. The Nasdaq 100 was off just over 0.5%, and small cap slipped about 1/3%. So, what really stands out here is it wasn't a broad market panic. It felt selective. Some sectors held up while others got sold hard.
Right. And the other thing is there were two clear themes: fresh AI commentary from large software names, and a regulatory move in cannabis that triggered a classic sell the news reaction.
Let's unpack the AI story first. ServiceNow and IBM had commentary and filings that made analysts rethink how quickly AI revenue would ramp and how much integration might cost. That created pressure on high-valuation, AI-exposed names and helped explain why the Nasdaq underperformed versus the broader market.
Yeah, that tracks. Analysts note the worry was less about long-term AI potential and more about timing, when clients actually pay, and near-term margin pressure from integration and implementation costs.
Exactly. And algo-driven strategies seem to chop some of that risk away from big AI-adjacent stocks, which magnified headline moves. I mean, when you step back and look at this, a few cautious comments can move sentiment quickly in concentrated indices.
Short reaction. Not what anyone expected.
Short reaction, big move.
On the cannabis front, there was news around Schedule 3 rescheduling that looked meaningful on paper, but the immediate market response was sell the news. Traders who had bought into the anticipation took profits, and without clear near-term fundamentals, the group faded.
That felt familiar. A policy step forward, then tactical profit-taking. The pattern's been seen before. Anticipation pushes prices up, confirmation sparks rotation, unless earnings or cash flows justify a re-rate.
Right, and for folks listening, sell the news just means traders had already priced the victory into stocks. So when the news actually landed, they booked gains.
We should also explain 8Ks because there were a bunch today. Companies file an 8K to disclose material events to investors, like earnings commentary, management changes, or other updates. Today's string of filings added to the day's headlines and idiosyncratic moves.
Mobileye, Nasdaq, Inc., and several utilities and small-cap names filed 8Ks that created volatility. Those are the kinds of filings that can move a stock, even when the broader economy isn't flashing anything new.
Let's walk sectors, starting with winners. Energy and renewables held up well. Investors rotated into areas that feel less growth-sensitive, and renewable project announcements helped the group. Utilities also outperformed on headlines around grid upgrades and storage deployments.
Yeah, utilities looked like the defensive choice for the day. Yield-sensitive positioning and momentum around modernization projects. Analysts point out that when growth expectations wobble, yield and stability become attractive.
Industrials and materials were mixed. Some CapEx beneficiaries showed strength, while others still wrestle with cost pressures. And in defense, Lockheed's quarterly update helped that corner of industrials hold up as a hedge.
The tech complex was the weaker area overall, hit by the AI commentary we talked about. Software and cloud names were notably pressured, which fed into the Nasdaq's relative underperformance.
Consumer and retail were split. A few AI-driven merchandising stories got attention, but headline risk kept a lid on broad rallies. Real estate had pockets of leasing momentum in logistics and specialized spaces, but it wasn't a major market mover.
Crypto-related equities were basically trading headlines rather than fundamentals. Heightened intraday swings there. Financials had some isolated moves tied to filings and bank commentary, but nothing that pushed the whole group.
I was a bit surprised by the constancy of the rotation into renewables and utilities. Honestly, I was a bit surprised by this one.
Yeah, that was interesting. It suggests some investors prefer sectors that react to policy and inflation stability rather than growth re-rates.
A quick technical note. This session looked like a mild risk-off day, not a broad-based sell-off. The modest declines suggest consolidation more than capitulation. But market breadth was uneven. When mega cap tech wobbles, it can skew headline indexes because those names are so big.
Right. That concentration effect meant the Nasdaq was hit harder than the S&P, even though the overall move was fairly modest.
Looking ahead, what should listeners watch next? 1. Follow through in earnings commentary for more color on AI costs and revenue cadence. 2. Cannabis. Implementation timelines and tax or fiscal details could matter a lot. 3. Next economic prints. Jobs, inflation, or retail data could shift how traders price Fed expectations.
4. Sector leadership. If the rotation into utilities and renewables continues, that's a sign investors are leaning defensive. But if AI execution updates come in stronger, tech could bounce back. 5. Keep an eye on 8Ks. They can create outsized moves, especially in mid and small cap names.
Good checklist. Analysts note that this kind of patchwork day often leads to elevated volatility around upcoming earnings and regulatory updates. So expect more headline-driven moves in the near term.
Short reaction. Stay tuned.
Before we wrap, a few notable company items. ServiceNow and IBM's commentary pressured software multiples. Mobileye's 8K reminded investors of execution risk in autonomous tech. Lockheed's results provided a relative safe haven in defense. And the Cannabis rescheduling headline led to quick profit-taking across the sector.
Right. And those are examples of how company-specific news can override macro prints on any given day. Data suggests investors were parsing which earnings beats or misses actually change corporate margin expectations, and by extension, Fed pricing.
Okay, time for clear takeaways. 1. Today was a selective pullback, not a widespread crash, but a recalibration around company-level news and regulatory moves. 2. AI commentary shifted near-term expectations, pressuring high-valuation tech. 3. Policy progress in cannabis produced a sell-the-news pattern, so fundamentals still matter for a longer-term re-rate.
And 4. Watch sector rotation. Renewables and utilities showed strength, which could persist if growth concerns deepen. Also watch upcoming earnings and any fresh regulatory detail.
Quick reminder, this episode is informational only. We're not recommending buying, selling, or holding any security, and we're not providing personalized investment advice. Analysts note that the signals we talked about are interpretive, and investors should consult their own advisors.
If you enjoyed the recap or have questions about anything we covered, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. Catch us next market day for another Alpha recap, and send your questions to stockalpha.ai. See you next time.